The Fed's next liquidity move could lift markets, crush purchasing power, and send gold and silver into a new phase. Subscribe for market alerts. This is not a normal market update. This is the plumbing under the market. The Fed's official mandate is maximum employment, stable prices, and moderate long-term rates. But when markets shake, policy does not stop at textbook language. The Fed and Treasury can use liquidity tools, balance sheet choices, swap arrangements, and communication power. Markets hear one thing: more oxygen. And oxygen reaches asset owners first. Banks, institutions, and people close to collateral feel support early. Households paying rent, food, insurance, energy, and debt feel it late. That is the core risk, very clearly. A stock market can rise while people get poorer. Federal Reserve wealth data through Q3 2025 showed the bottom half of U.S. households held about 2.5% of net worth, while the top 1% held about 31.7%. So if liquidity pushes stocks, real estate, gold, or silver higher, the people already holding assets benefit first. This is why hard assets matter. Not because gold and silver are magic, because they measure trust. In 2025, Morgan Stanley's Mike Wilson discussed a 60% equities, 20% bonds, 20% gold framework. That means even institutional thinking started moving beyond the old 60-40 model. Now look at the pressure points. Treasury Secretary Scott Bessent discussed dollar swap line talks with Gulf and Asian partners to support dollar liquidity and avoid disorderly U.S. asset sales. That is not noise. That is global dollar plumbing. The BIS reported over-the-counter derivatives at about $846 trillion in notional value by the end of June 2025. Notional is not direct loss, but it shows the system's interconnection. In 2008, the FDIC listed 25 bank failures, proving stress did not stay neatly on Wall Street. Now add AI. Kevin Warsh argued AI could make almost everything cost less. But Meta planned roughly 10% workforce cuts, while Microsoft offered buyouts and companies spent heavily on AI. So productivity can lift margins before it lifts workers. That creates political pressure for more support. Powell's chair term ends May 15, 2026, while his board term runs until January 31, 2028. Even if Warsh replaces him, the real issue is not personality, it is constraint. Debt, liquidity, labor stress, derivatives, and dollar funding limit discipline. Pure Tungsten's South Korea project targeted first production in June 2026 and a 2026 listing, but mining valuations remain speculative. Watch the Fed balance sheet, swap lines, gold versus bonds, silver demand, AI layoffs, credit spreads, and private credit. If support returns, hard assets may become the market's vote of no confidence.